was just looking at a website. I won't name the name, but it rhymes with Hero's Edge, which they tend to be permanently bullish, and they just featured an article that stated there's too many bears. There's so many bears that it just absolutely guarantees, we'll be sailing higher based on historical contrary opinion. I don't know. I don't think there's too many bears out there. I think there's like two, but they seem to think that pessimism reigns. Not on a day like this, it seems. We're up solidly. We're up over 70 points in the ES, up over 350 on the NQ. Yesterday was red, today was green. It's very festive. But it looks like the New Year optimism has dominated today, whereas yesterday I can only suppose that some profit taking was going on because taxes get pushed forward a full year now that the new calendar year has begun. I've got my charts preloaded for easy digestion, so let's just jump in there and catch up with the second day of trading in 2025. Here is the spider. We did an almost perfect to the penny tag yesterday of that midline. That midline is key. And as I said yesterday, should we ever break it, that really opens up selling at least to the election gap. But as it is now, all of the damage from yesterday and from Tuesday has been undone. We're basically back to where we were last week with this big up push. But it has just been grinding away for a while here, as you can see, like down and up and down and up. It's just really going nowhere fast. We are roughly where we were back early in November, just grinding away. Here's the diamond, also green, and also finding firm support, in its case, the election gap. So we found it principally here and also yesterday. So we're very range bound now. Ever since we had our big plunge last Wednesday, we've been banging around inside of this range. We're pretty much in the middle of that range right now. This is Argentina, the country fund, and we try to not talk politics here, but at heart, I'm basically a libertarian, and so and a dog lover even more so. So when I saw in late 2023 the new president of Argentina elected, beating a socialist and also surrounding themselves with big old dogs, I liked him already. I would have voted for the guy if I could. But his program, at least judging from the equity markets, have met with great success. From a technical perspective, it makes a lot of sense because we had this huge base here on ARGT, which was busted above early in 2023. Perhaps there's a general idea that this guy is going to change things and going to win. And the election was roughly here. And as you can see, it has been a sensation since then. So ARGT, lifetime high following the victory of a new form of government there. I don't know if he ever put dogs in his cabinet as he pledged to, but maybe. So good for Argentina. Not everything is so rosy south of the border, though. Here's Mexico, which I've mentioned probably is going to have a rough go of it in 2025. Even on an incredibly green day like this one's down hard. We're down over 1.5% beneath this big old topping pattern. I tend to draw these semicircles in pink just to kind of make it really obvious. But yeah, so far so good on that. And Brazil, an old favorite of mine, which I foolishly took profits on. I think it's just going to keep grinding lower. We're down over 1 percentage point on this. And that's even with oil up big, which is saying something because Brazil usually at least we get propped up by strong oil because of PBR, but that too is falling. Speaking of fuel and speaking of cars, let's look at Tesla today, having a good day. Yesterday it fell pretty hard and it's recovered all that and then some, but let's just take note here. Let's zoom in. I haven't moved any of these Fibonacci's, even though that former high is a distant memory now. The former high being in November 2021. That was the anchor point of all three of these Fibonacci retracements, but I've left it there for now. And we busted above it right here on the 11th of December. We peaked on an intraday basis on the 18th of December at, we got close to 500 and fell a little, rose a little, and then started this bang, 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 all the way down, bottoming yesterday, having gone from 488 down to 373. We have undone all of yesterday's damage and a portion of Tuesday's damage. What I would say, though, is that there is a goodly amount of resistance at this point, not only because of all this buying up here, but I still think these Fibonacci's have power. And there's 3 of them all lined up like so, right like there. So we will see, but I think that it's great that Tesla bounced today so nicely. But I think this is probably simply a recovery from all that selling earlier in the week. Rivian is having a terrific day. It's up almost 25%. This thing, though, it's kind of all smoke and no fire because it keeps basing and it does well, then it flops. And so we've seen that here and here and here and maybe here again. Every single time, it's formed a nice bullish base. And for a while, maybe a week, maybe 2, maybe even 3, it's done terrific and then just kind of sputters away. So again, 1, 2, 3, there's the 4th instance. So we do have a breaking out. It's no surprise at all. This is bursting so nicely above that formation. It may well have a terrific rally ahead of the next week or 2. But if history's any guide, it's not the beginning of some grand new run, which is too bad. I really like Rivian, but just saying. It's probably got more gas in it, as it were, but this hasn't historically been sustainable. Carvana, or we're still on the subject of cars, plunging again. Still, Hindenburg Research, I think, was the one who came up with a quite damning report. And although the company's denied it, looks like the public's not really buying it very much. Sadly, I have no position in this, even though I was talking smack about these guys when they were way up here, because they had an incredible run. They had moved from like, $2 or $3 a share up to almost 300. It was this absurd multi-1,000%, probably tens of 1,000% run. But of late, it is really doing poorly. We've gone from 269 approximately. We're at 175 now. So, wow, big drop on Carvana. I know some of you, because some of you got in touch with me and said you were short this. Congratulations. You have greater fortitude than me. But this one is just getting really zapped hard. What is that, like a 50% loss more in just a matter of weeks? So quite extraordinary. Really bringing to mind this kind of drop here, which was the beginning of a multi-year slog lower. So yeah, Carvana. Semiconductors continue to vex me badly. I, again, threw my arms up in disgust earlier today at ARM. I'm out of that, as well as NVIDIA. I've still got some positions in semiconductors. I've got NXPI, and I've got AMD. But someone keeps breathing new life into these fellas. But let me just say of NVIDIA, this trend line still matters. And I'm going to keep an eye on this trend line to see if it fails to push past it, because that will be a meaningful fact if it does. But as it is now, good day for NVIDIA, up over 4%. But this broken trend line still, I think, has substance. And therefore SMH does too, because NVIDIA is the biggest component of SMH, semiconductor sector ETF, and so it's up not quite 3% and getting kind of close to this dash line, which has been resistance for a good, well, not quite 2 months. So worth watching. Quantum is starting to see some profit takers here and there. Here's Rigetti, which has been obviously extraordinarily popular lately. It's had a multi 100% run on enormous volume, hundreds of millions of shares a day. This one having moved in just a couple of months from a penny stock up to almost 20. So like a 2,000% gain plus. Not surprisingly, some people are taking profits here. We're down about 6% on this. But there have been little spats of selling here and there. Anyway, this doesn't necessarily mean this is the top. Something like this, I just watch from a very safe distance. And there are some items that I've never heard of in my life that are joining the party here that, again, these are like virtually unknown, and suddenly they're trading hundreds of millions of shares. a day. This is a Seal SQ Corporation, whatever that is. And you can see once more, they've gone from nobodies to like some of the most high volume stocks in the world. Because quantum, quantum, quantum. One nice little exception to this green day today is miners. That is to say GDX. We're down about 2/3% on this. And I don't know if I pointed out yesterday because I only sort of dawned on me the importance of this trend line recently. But this had been resistance, 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 and then support for a while. But we again appear to be, if you'll take note of yesterday's high, treating this line as resistance. And we have burned off a little of yesterday's gain. But my hope / belief is that that rounded top there will win the day. So the trend line so far has done its job. It's held the price back. It really, of course, depends on things like gold, obviously, which has a much sloppier top now, which is not complete, although silver does have a complete top, and that may be of aid to bringing GDX down. So again, just looking at XAU in general, which is the different cash-based representation with GDX trades, we've got a nice topping pattern here, a little bit of a violation yesterday, but nothing too serious. I'm also continuing to be fond of the oil producers on the short side, even though oil itself, which is an extremely sloppy pattern lately, has been quite strong in recent weeks. We've got another big green today on USO, but XOP is up, but relatively modestly. Considering what crude oil is doing. You can see we've got a doji candle on this. We've had a big run higher on XOP, but the higher we get, the more overhead supply it's running into. And so things like COP, like so, and BP, like so, I believe are very clean setups for any energy bearish prospects. So getting back some ratio charts you've seen from time to time, the big theme for me continues to be the same. Based on long-term, that is to say, multi-decade history, the relationship between equities and real money, that is to say, precious metals, looks like it's turning lower. These reversal tops try to illustrate that. This is all world equities versus gold. This is the Dow Jones Composite versus silver. This is the Russell 2000 versus silver. I'm only mixing things up here to show it's just not one very, very specific odd instance. It's pretty universal. Some form of equity, take your pick, versus gold or silver. They all tend to look like these major topping patterns. And one last thing, of course, to keep an eye on is interest rates, because it seemed to me a month or two ago that interest rates perhaps were topping and we're heading for much, much lower levels. Doesn't seem to be looking that way right now. Bonds continue to be very weak, and rates are starting to bust out above what seemed to have been at the time reversal patterns. Instead, they're just getting stronger, which might imply that inflation is going to come back.